All right, first one up, the NTIL, which is the average aggregated spot rate for dry van freight moving more than 250 miles, based on our trusted rate assessment consortium, at a high level, excluding the total estimated cost of fuel. So we get all that fuel noise out of there. There hasn't been a lot of that lately anyway, but look, I mean, this peak to a complete decline. This is what a lot of transportation service providers are feeling right now. It's going to feel much more harsh than it actually is. Looking at the short-term trend, we have plummeted, over the last, since February started. So we're finishing February right now, but still elevated above where we were for a large portion of third quarter in the second half last year. So there is some optimism there. And I think this is also just the spot rates can always drop while there is abundant capacity. We always have to keep that in mind. I think the trend line has been shifting a little bit higher, but you got some emotion here that we're capturing, especially since February is not exactly the best month for freight. However, let's go to the next chart. OTRI, Outbound Tender Rejection Index. It took it a little bit longer, but it's still, it's plummeting too, but we're seeing a little bit more stickiness in the OTRI. This tells me that the spot rate might be a little bit more exaggeratory because of that emotional sentiment. OTRI, of course, the tender rejection rate from shipper to carrier, as carriers are rejecting those tenders. This is still relatively high compared to where it was most of last year. We averaged 3.6%. We're still at 3.9%. And we averaged a good chunk higher through most of February. So not necessarily as bad as the spot rate implies. Let's go to the next one, OTVI. This gives me a little bit of optimism for the freight market in March. Look at that little spike there. Looked like things were falling down, but demand is actually on the up and up. Hard to tell though, considering the oversupply.